react to, but for sure there's going to be lots of moves both down to begin with, as you can see on your screen, and then maybe some recovery. 21,800 is where we are at on the Nifty. So 21,830 to be precise. The Sensex is down about 560, 530 points. So that there's a cut, 0.75% is what that amounts to, right at 915. Bank Nifty is down about 0.86%. We're at about 46,650. You've got the mid-cap index down about 1.33%. So there's a bit more there. And the small-cap index, I think, is also should be down about 1%, broadly in line with what the mid-cap index is doing. Market breadth 4:1 in favor of declines to begin the day.
Well, a few stocks that are reacting actually to that spike that we've seen in crude oil prices. The OMCs have taken it negatively. So HPCL, BPCL, IOC, all of them are the top losers in today's trading session. ONGC gains because of higher crude prices, but OMCs, they will feel the pressure. And price hikes are unlikely. So you have all these stocks that are lower. IOC, HPCL, as well as BPCL. Interglobe Aviation, yes, charges are moving up and cost of travel is moving up, but the input costs as well will spike up if crude oil prices are going to move up. So that stock as well is lower in trade. Otherwise, it's been a rank outperformer today, coming in for some profit taking. You have Canara Bank that's down close to around 2.5%, so that's seeing some selling pressure. Havells is down close to around 2%. What's gaining then? On the winning side, you have a few stocks that are up. Oil India is up, giving ONGC company. You have Exide in a world of its own. It's up close to around 1% in a market that's looking quite brittle. The number of stocks advancing are just around 255 odd. But you have to say that the start isn't as bad as feared. 160, 180 point downtick. That's par for the course, I would say. And the Nifty Bank is now close to around the 100 DMA. That's the crucial one in there. You have HDFC Bank, which will be coming out with a set of numbers tomorrow. If the Nifty Bank can see a bit of a bounce from here, it'll give some kind of support to the Nifty. This is a net short market. So any kind of support, any kind of defense of lower levels will be good actually from a bullish perspective. So let's see how this goes.
Well, so the top Nifty loser today is HDFC Life. They came out with numbers yesterday during market hours. But post those numbers, brokerages are lowering the target price. So HSBC has cut the target price from 800 to 750. Jefferies has also lowered it to 750 from 800. Bajaj Auto is the surprise, stock which is opened in the red despite strong numbers. The stock is lower by close to about 2%. CLSA has a sell call on Bajaj Auto. The target price is much lower, below 7,000, but they believe the stock is overvalued after the recent run-up. Remember, the stock in the last 6 months is up 80%, so maybe some profit booking. Infi opens in the red. It's down close to about 2%, and now its week-to-date losses is close to about 6 to 6.5%. Axis Bank is under pressure. Abhishek was talking about how they will be considering a fundraise along with their numbers. Nestle continues to see a correction. Yesterday, Nestle was down 3.5%. It's seeing follow-on selling pressure, and at least in the early rate, it's down close to about 1% odd. So these are some stocks, and others where you are seeing some news-based action. GMR Airports, Gokuldas, where there's a QIP, ICICI Securities post their numbers, are also some stocks you should keep on your radar.
So it's of course as expected, down and out. 8 is to 1. So our declines outnumber advances, some 8 is to 1. 1,800 stocks are lower, 250 stocks are higher. This is the broader market picture. So top volume-led losers are HDFC Life, as we highlighted, 4% cut there. BPCL with a 4% cut. Indigo is down 3%. Indigo at about 34.88. Canara Bank is down 3%. Canara has got a large cut as well. So I mentioned HP. BP is the other one. BP is down 4. BPCL 4% lower. Tata Communication, Rima mentioned. Phoenix down 3%. That's Phoenix Limited. Metropolis is down 3.5%. But nothing very much on the downside as far as volumes are concerned. So while the number of stocks which is down is a long list, it's not backed by volumes. It's not. In any case, beyond the first 6-7 names that I mentioned, volumes are lacking. On the upside as well, actually, it's a slower start with regards to volumes, and maybe because participants are on the sidelines, not wanting to do much till this clears out. Demat, Avenue Supermarts with a 3% rise is the second biggest volume-led gainer right now. ONGC, which we were discussing earlier, 1.25%. These are small moves. Oil India, this is just sort of direct play on what's happening with oil, the jump that we've seen. Apollo Hospitals sold off yesterday, was one of the big movers on the downside. That's seeing a 0.5%, 1% recovery. Cochin Shipyard, transformers and rectifiers is is, I think I saw 5%, now it's up 2.5%, 650 on that one. Crystal, which is the facilities management company, which listed recently, had a run-up early in the week. Yesterday sold off 15%. Crystal is up about 1% as well, so keep an eye on that one. It's got volumes, and that's why I'm mentioning this. But overall, both on the upside and downside, beyond the first 10, 12 names, volumes are lacking. So keep that in mind at this stage. Well, let's get some perspective going with our market master of the day. Harsha Upadhyay is President and Chief Investment Officer Equity at Kotak Mahindra Asset Management Company. Harsha, good morning. Great to have you with us here on the program on CNBC-TV18. Just a quick word, Harsha, on the flux we're seeing out there in the market, and does it add to the complexity? You guys have been pointing out that valuations have been a little problematic. In January, we got a 3.5% fall, at least on the Nifty, larger for mid and small caps. But all of that was bought back double quick. And now we find ourselves with some geopolitical flare-up impacting risk assets. Do you think even without this, things perhaps stay a little quiet sideways for the next couple of months?
Good morning, Prashant. Yes, our view remains the same. We do believe that valuations continue to be the primary risk for the market at this point of time. Along with that, as you rightly mentioned, the Middle East conflict also seems to be escalating. We need to watch that space. And also how it impacts the crude oil price. I think that's going to be very, very important. Not just for the crude oil derivatives, but for most of the companies, the margins are dependent on how crude oil behaves, either in terms of raw material or in terms of fuel cost. So to that extent, I think already we have seen our EBITDA margins at one of the highest levels. It's unlikely to go higher even with the operating leverage. And along with that, if you have margin impact coming up because of crude oil prices, then that would be negative for the markets. And as we have discussed in the past as well, current valuations, it doesn't leave any room for disappointment. So the earnings delivery is really, really crucial for the markets to sustain these levels or go higher from these levels. So to that effect, I think what happens in Middle East is going to be very crucial in the very short term.
So would you tilt your portfolio more towards the defensive, safer stocks right now? Is there any portfolio adjustment that you would recommend to tide through these times?
Probably not, because those which are defensive seem to be struggling with their business momentum. For example, FMCG has its own issues with consumption trends continuing to be weak. IT, as we have seen, the results have continued to be weak. The outlook continues to be really, really lackluster. So there are no real defensives in terms of sectors at this point of time. But I think banking could be one where probably the valuation risk is less compared to many other sectors. However, I'm not suggesting that the Middle East conflict is definitely going to flare up and that's going to have a longer term impact on the markets. We need to be watchful of these valuations is all that I'm saying.
Okay, all right. Hi, Harsha. Good morning and good to see you. When we last spoke, you were neutral on IT and with preference for large cap over mid cap. Accenture, well, they sounded the alarm bell out there. And now you have Infosys numbers that are fairly disappointing with benign guidance, which is weighing on the markets. What's your stance now? Do you continue to maintain the neutral stance with the preference for large cap?
Nigel, probably we have booked some profits in the recent times when there was a up move in the IT sector. So to that extent, maybe it will be slight underweight to benchmark at this point of time. And as you rightly mentioned, the results that we have seen initially have not been inspiring. Even the outlook that has been outlined by management doesn't seem to be inspiring confidence. Most of the verticals are showing continuous pressure, except for probably high-tech and communications verticals. The overall consumer discretionary spend that we are seeing is also on the lower side. So overall, it doesn't seem that immediately there is going to be anything that's going to excite the markets from the IT sector. Yes, the valuations have cooled off, especially in the last month and a half. So to that extent, probably in a falling market, it will give you some kind of a defensive bias. But other than that, I think immediately unlikely to outperform the market.
Right. Harsha, the other sort of sector which has done very well is pharmaceuticals. Just a quick word there. We had the management of Lupin recently with us, and we were asking them about the US generic pricing. They were saying it's still, the fall is in single digits. there are expectations that actually that factor, that the price fall becomes neutral. We don't know if it will swing on the other side, but if it does, I mean, that's going to be quite something. Stocks have done very well, but what's your sense, Harsha?
Yes, on the US generic pricing, I don't think there is a common thread. It all depends on which portfolio each of the pharma companies are looking at and at what stage they are in the US generics business at this point of time in terms of the new molecules, etc. So overall, I would say that it's still a sector where you can have a neutral position at this point of time. Overall, domestic growth as well as exports growth continue to be reasonable. There are no real large regulatory headwinds at this point of time. So overall, I think it can be a neutral exposure in the portfolios.
So IT is slightly underweight. Pharma is a neutral. Banks, I believe you're overweight. Any other changes that you've made? Tweaks in your weightage?
No, we are not overweight on banking and financials. Okay. We do have some positions there, but it's still an underweight. Most of our overweight is still in some of the domestic cyclicals, such as industrial, cement, automobiles, auto ancillaries, some of these sectors. Continue to bet on the cyclical part where demand continues to improve. And yes, the margins may have peaked in some of the sectors. The valuations may have been on the higher side. But still, when you look at next couple of years, I think these are the segments where there is going to be reasonable level of demand growth, and also profitability growth should be higher than that of the market.
Okay. Well, for the time being, the Nifty Bank has taken support at around that 100 EMA. We're seeing some kind of a bounce from those levels. So that's good to see, because the largest part of the market is giving some kind of support. Harsha, the other focal point today is Bajaj Auto. The numbers look good. Good margin improvement. Commentary as well, fairly decent. The problem is how much is in the price. And I was looking at two notes from Citi as well as CLSA. They are sounding a little bit cautious on the exports front, which actually has been lacking, but they are not too enthused that in the next 2 years, you're going to see any kind of big growth. What's your view on the two-wheelers, and what's your preference out there?
I won't be able to make any stock-specific comments, Nigel. However, we continue to be positive on two-wheelers within the automobile segment. After a long time, we have seen volume growth sustaining, and also the impact of two-wheeler electric vehicles seems to be not as much as what the market was fearing earlier. The margin profile has also kind of improved. However, across the sector, the valuations are not same. So to that extent, you need to look at valuations from a bottom-up perspective and then take a call on the sector. But from a demand perspective, I think things are fine in the sector.
Okay, so just give us a little bit more color on this positive stance on the two-wheeler segment. Would you prefer the export-related name, or do you prefer the domestic name, or maybe in fact the one that's more into premiumization, where even if EVs come in, you have larger bikes that are being sold, so it doesn't really impact them. Give us a little bit more color on this positive stance that you have on two-wheelers.
Domestic demand continues to be stronger than the exports market at this point of time. And in terms of premiumization, I think that's across the board, not just in two-wheelers. I think whichever consumer segment that you are looking at, since the wealth effect has been much higher at the upper end of the economy, I think the premiumization is still continuing. I think these two trends will continue to drive overall larger demand and will have more impact on the two-wheeler segment as far as we are concerned. I think exports is still something that needs to be watched. There are certain markets which are not as good as what they used to be in the past. So maybe you will need some more time for export markets to stabilize.
You know, by the way, just a quick look at the market, right? I was talking about the lack of volumes. Well, on the downside, market breadth is still negative. If you count number of stocks down and up, it's still in favor of what number of stocks which are down. And volumes are still lacking on the way down, but volumes are picking up on the way up in the broader market. All right, so I was just able to count 5 names with volumes, but that list is becoming longer now. Let me just tell you, Bajaj Electricals, for example, 2.5% higher. So there is it just shows you interest. KM Sugar is up 9%, $40. It's got large volumes for this point in the day. There is KEI, which is up 2%. It's done very well. It's got decent sized volumes. Premier Explosives, I think 3% higher, decent volumes. RK Forging, that sort of agreement with, of course, the management did not confirm it, but perhaps in all likelihood with Tesla, many-year agreement. Stocks up slightly, but there are volumes here. High-tech gear is up 2.5%, and it's picking up. That's the point that I'm wanting to make. on the way up, even though overall, numerically, declines outnumber advances. Harsha, just one quick word on flows. We were talking about the last month AMFI numbers, and we saw a shift away from small cap funds, etc., towards large caps. Has that continued into April so far?
Yes, in a way, I think the overall numbers in mid and small cap categories seems to have been slightly lower than the trend number that we used to see for the entire financial year last year. However, I mean, it's too early to call out that the small cap flows or the mid cap flows are going to definitely reverse from here on. I think it's just a bit of valuation concerns that's running on the minds of most of the investors, and probably some profit booking that's also happening.
Harsha, great conversation. Thank you very much for joining us on this important day. Moving on now to Bajaj Auto, that's under pressure despite reporting a strong set of Q4 earnings. The company's margins have expanded by 80 basis points to 20.1%. Revenue performance looks good, above street expectation, and profits have seen a more than 30% jump. Rakesh Sharma, ED of Bajaj Auto, is with us on the show now. Mr. Sharma, morning, and thank you very much for joining in. In the call yesterday, you have said that the industry growth will be 7 to 8% in FY25, and the company will do better given your rising share of 125cc plus. Now the question is, can your volume growth be in double digit? Last year you did 10.4%. Can you do better than last year, in FY25?
Good morning. Well, that certainly is the aspiration. And if you just take the recent past of, let's say, Q4, we have grown twice the rate of the industry growth. And in the 125cc plus, the upper half of the industry, we have grown 4 times that of the industry size. Now, this has been driven by largely, the slew of new launches, which have been very well received in the Pulsar brand. So we have already got traction, and we have confident that this should continue. So if the industry returns something like a 7 to 8% growth, I'm expecting that the structure of the growth will be similar, which is the top half will grow faster than the bottom half, and we will grow faster than the industry in both the top half and the bottom half.
Do you want to put a number to that? Faster, could it be 2x? If 7 to 8% is the industry, can you repeat the performance of Q4 and grow 15%?
I would not be able to give you a precise number, but I have told you a very good indicator of future performance is the recent past. And if the industry grows at 7 to 8%, I have no reason to believe, given the track record, that why we should not be in double digits. We would certainly be driving for a double-digit growth.
Okay, all right. Hi, Mr. Sharma. Good morning and good to see you. When you're sounding pretty optimistic in terms of growth, and your margins as well clocked more than 20% for the second quarter running. But before we get to the margins, I want to ask you about exports. The last few years, last 2 years at least, you've seen a bit of a degrowth out there, and that's that's what the industry has been under pressure. I think it's still 25% off the peak that we saw in FY22. Now, the bullish sentiment on the street is that you'll at least see, 11 to a 15% growth in exports for this year. Do you believe that that's possible for the coming year? That's FY25 as well as FY26. That's the rough per annum growth that the street is factoring in.
So, the way to look at exports now is that we have to start to segment the market, overseas markets. Now, we cannot paint the entire world with the same brush, because what we have done for our financial year 25 planning is to segregate the markets in 3 buckets. The first are the stressed markets. Unfortunately, some of our large markets like Nigeria and Bangladesh are in that. We've taken a very, very sanguine view about what to expect in these markets. We will roll with how things go in those markets. Then there are the most of the other markets. They are showing a very good recovery, particularly in Latin America and now ASEAN, Philippines, etc. Here we have assumed a very aggressive stance, again on the basis of our recent success, particularly in Latin America, For example, our growth in Latin America has been 26%. And that has affected both the bottom line and the top line, as you can imagine. And then there is the third bucket, which is some of the new markets, which will sort of start to kick in, but not in a very, very significant way. These are places like, Brazil, where our new plant comes on stream in May, which will help us unlock pent-up demand and expand the network footprint. These are places like Venezuela. We are making an entry into Europe, which hopefully by the second half, or let's say at least the last quarter of the financial year, will start to show some impact. So therefore, when we, despite taking a conservative view of these troubled markets, we feel that FY25 will be certainly better than FY24. But having said all that, you must also keep in mind that there is a base effect also, which will start to show up in the growth numbers.
Mr. Sharma, is there you've alluded to in the past some of the macro variables, right? Dollar, for example, dollar shortage in many African markets. Dollar is on the rise, Mr. Sharma, in a meaningful way, and perhaps the forecasts are. I mean, we are not experts, but forecasts are that there is upside risks here. Does that become a bit of a headwind, especially in some of these African markets for you, and impede any recovery that you may be seeing there if that trend continues? Or do you think the worst is behind?
Well, after the passage of last year, I'm very, very loath to say that the worst is behind us, because the situation on the currency end is quite fragile still. And that is the reason why I said we've taken a sanguine view of some of these markets in our planning, and we will just roll along. And you are right, it is, the single most important challenge which we are facing. And it's not just the availability of the currency, which I must say is improving, but it is also the inflation caused by the devaluation. So the purchasing power to begin with in these economies is not very high, and the consumer takes time to digest the price increases which are due to the devaluation. So that factor is also over there.
Mr. Sharma, what's the planning on margins for FY25? In Q4, the commodity basket was fairly neutral for you. But in Q1, we've started seeing a rise, particularly in copper prices. Aluminum prices too have inched up. So is there a risk?
Well, I won't say there is a risk. We also noticed this slight uptick, and we have actually been very proactive, and we have taken a little bit of a price increase on 1st of April, just so that, we are at pace with these expected cost increases. But having said that, a lot of these cost increases are also getting neutralized by some reductions, gentle reductions, which we are seeing in, noble metals, etc. And then, of course, there is the gentle devaluation of the dollar, which particularly in the last 6 to 8 weeks, we have noticed the realizations are improving. So that is very, very helpful. So when you combine all this, then at least as we stand, we are not really so concerned about the margin outlook. And I must just remind you, and I must just sort of point this out, that though our two-wheeler EV business has, gained substantially, I mean, it's gone from, we are now clocking 15,000 units per month, which, as you all know, that the margins are lower than the corporate margins. But thanks to some of the cost saving work and R&D work, as well as sourcing work, supply chain work, we've been able to mitigate the impact on margins of the substantive rise in the electric two-wheeler business.
Just a quick word, how much lower are the EV margins versus ICE margins for you?
See, we don't get into segmental level margins, but obviously they are lower than the corporate margins.
On a unit level, it's loss-making?
Well, like I said, we don't get into the unit level descriptions and all that. But of course, these are much lower than the corporate margins which we have. And Bajaj Auto margins are a blended margin between international, domestic, three-wheelers, premium bikes, entry-level bikes, etc.
We'll let you go at that then, Mr. Sharma, but we're looking forward to having a chat with you maybe by the end of the month when we get your monthly numbers as well. Wishing you a good day ahead.
Thank you.
For the time being, though, we'll slip into a short break. Up next, we'll connect with Mr. Dinesh Thakkar, the CMD of Angel One, to discuss their quarterly numbers. Welcome back. Some stability in the markets. It's not as bad as we thought earlier this morning, and that's for the good. Good for the entire globe if there's not going to be escalation, and good for the financial markets as well. We're down only around 140 points odd. Let's focus on Angel One, though. It reported a strong set of numbers at the end of quarter four. The company has done a healthy client addition in quarter four, while their margins as well have improved a little bit. The management in the conference call said that they will sustain their growth going ahead. So let's get straight to a discussion with Mr. Dinesh Thakkar, the CMD of Angel One. Hi, Mr. Thakkar. Good morning, and thanks a lot for joining in.
Morning.
Let's focus on your client addition. Yes, it's been healthy, but your monthly updates suggest that the gross client addition has slowed down a little bit for the third consecutive quarter. How should we view this?
I do not see any slowdown in new acquisition that we are doing. In fact, this quarter we did around 29 lakh customer, which is higher than previous quarter. And if you look at customers that we are acquiring, they are from the same kind of a demography of mostly coming from tier 2 and beyond, which is around 85 to 90% of our clients that we acquire. So overall, I see this healthy trend. Small deviation here and then, month on month can be there because March was a bit lower than Feb, but it was very high in compared to our year-on-year growth. Because when we started this year, we were acquiring around 4 lakh customers. Yes. And in this quarter, we acquired 29. That means average of around 9 lakh and above.
So you expect that sort of a run rate to keep pace around 9 lakh on a monthly basis?
Yeah, we expect that this kind of run rate would be able to maintain and continue. In fact, we are expecting an increase in run rate because now just in this quarter, we have started sponsoring on IPL, branding activity and all that. So we feel that that is going to help us acquire more customers from that area or demography or tier 2 and tier 3 that we are aiming for. Because what is important is top of the mind recall that a customer has when they are thinking about opening a broking account. So we feel that is going to help us in terms of accelerating this trend.
Okay. Mr. Thakkar, good morning. Prashant here. Good to see you, sir.
Hi, Prashant.
Just a couple of points. One, in the month of March, when you look at we get the Demat, number of Demats account, etc., there was a small dip. I'm not talking about Angel, but I'm talking about overall industry. I mean, the rate of growth actually came off. So I don't know if you have any thoughts there. I mean, is this the first sign of maybe... or that's not really true, and April things have picked up, Mr. Thakkar?
No, it is very relative. Say if you compare with Feb, it appears to be there was a bit dip. But if you compare with October, November, we are seeing sustained growth which started from December. It continues. So there can be a variance of 10% here and there because I think by October, November, October, we were acquiring around 6 to 7 lakh customers. And then we jumped to 10 lakh. Then it came down to around 8.5, 9 lakh. So that dip is, I would say, a regular dip in terms of cyclicity of this kind of an industry, market, So clients are more active when market is going up. Small and mid caps are going up in Jan and Feb, if you remember. So this 10% impact would be there. But if you look at year-on-year growth, I think it would be quite reasonable to say this industry will grow at a good rate, plus digital players are going to grow at a decent rate.
Would they be, what about margins, Mr. Thakur, if you can give us some sense there? Because as you said, I mean, you're spending, you will be spending, and you're in the sort of OPEX phase, a bit of CAPEX as well, right? As you build out some of the other new businesses, wealth management, etc. There is the IPL spending as well, which of course will get you more recall down the line. Will sort of top line growth more than make up for all of this spending, and what does that mean for margins? Will margins be a little subdued in 25 as opposed to 24?
See, Prashant, the way we look at is that we have to take out sales cost when we are looking at our margins, because when we spend on sales, we book our cost immediately. But if you look at lifetime value of a customer, so this time we had revealed all that numbers, that when we are clocking any revenue for any year, it is a combination of vintage customers who are 1 year, 2 year, 3 years, 5 years old. But when we acquired this customer, we had booked our cost immediately in that very quarter. So there are two ways to looking at margin. One, we get an opportunity to acquire more customer. There will be an impact on overall OPM. But if I apportion this cost for 5 years, looking at the lifetime value of a customer, we would be at the same kind of an OPM what we have achieved this year. So for us to maintain this OPM of 45 to 50% is quite, I would say, comfortable. But if you get an opportunity to acquire more customer, it is an upfronted cost for which revenue is going to come in subsequent years. So overall, if somebody is looking at our model, they should look cost that we are taking to acquire a customer. It has to be apportioned for 5 years. If we do that, then OPM hit is not there. But even if I take cost of branding and cost of sales that we do every year, our OPM would be within this range of around 44 to 45%, inclusive of all the cost that we are spending on sales, that we are spending on new businesses.
What's the amount that you're planning to spend on sales, marketing, branding, X of the amount that you've planned for IPL this year?
Usually we don't disclose that amount that we are going to spend on sales because it is a composite number. But we have disclosed, because IPL number are there in the market, but we have disclosed in terms of how much we are going to spend on this IPL. IPL being a new property, we wanted everybody to know about that number. And when we achieve some traction in terms of client acquisition, it is easy for us to really portion that cost or justify that cost.
Okay. So you've given us a number on the gross client addition, and you're confident that 9-10 lakhs should sustain going forward. Any other growth targets that you can share on revenues, profitability, market share, and where does your market share stand at, and how has it changed?
See, currently in new client acquisition, our market share is 23%. And when we talk about active client, which is based on NSE formula, which is client who has traded once in a year, we stand at around 15%. So what we are seeing is that when we are acquiring customers, if you take a CAGR of last 4-5 years, CAGR of client acquisition has been 77%. But if you look at our PAT also, it has grown at a CAGR of around 68%. So as I said, there's a lag effect always when you acquire a customer. But when we take a block of 4-5 years, so that client acquisition is reflected in growth. So we are very confident that we would be able to maintain a customer kind of an acquisition growth of around 55 to 60%.
All right, Mr. Thakur, very quickly now, I would have liked to ask you about the new fleet of cars that you're looking at for the year. But besides that, the street will want to understand, you have a lot of cash in books now, and you're looking at some acquisitions from the fintech space. Should we hear about it in the first half of this fiscal, or is it for the second half of the fiscal?
So money that we raised was for growth. When I say growth, it is continuous growth that we are seeing in our company. This year, when we started, we were clocking around 42 lakh orders per day. And by this quarter end, as we reported, it is 86 lakhs, almost a growth of more than 100%. So when a business is doing an ROE of around 44-45% and growth for this kind of a year, quarter one to quarter four was almost 100%, we need capital for our existing business. Having said that, we are looking out for entrepreneurs, or we're looking out for people who have good solution for our existing customer. And it takes time. It is very difficult to say when we would be able to click any deal, because there is a pipeline of entrepreneurs or a small organization or people who have created solution for investors and all that. We are in talks with them, but when that will materialize, it's very difficult to say at this point in time.
All right, Mr. Thakkar, good luck. It's always a pleasure speaking with you, sir, and you've done a phenomenal job with Angel. So continue to.
Thank you very much.
Hope to see you doing as well in 25 as well. Thanks indeed. Well, let's talk about HDFC Life Insurance. Right, the stock's down. Subdued performance in the fourth quarter. Total premium saw single-digit growth, while total and retail APE also came in lower for the insurer. My colleague Yash caught up with Mr. Vibha Padalkar, Managing Director and CEO of the company, and they talked about the performance. Yash began by asking Ms. Padalkar about which particular sector did not perform as planned for them in the quarter. Listen.
I want to clarify that it went exactly as it was planned. And let me explain. We had the budget changes on 1st of February last year, and there was a sunsetting of above 5 lakh premium ticket size that were going to become taxable with effect from 1st of April. As a result of that, and in a way it might have been a fire sale, our March, and especially last 15 days of March, we got an incremental premium income of 1,000 crores, which we had explained and we had carved out to say this is an additional amount that has come in. And we had a supernormal growth and hence a base effect. So if I were to just deconstruct the numbers a little bit, this is for the fourth quarter and then consequently for the full year. Actual growth in individual APE was -6%. However, if I back out the 1,000 crores, then growth was 20%. Same thing or similar for the standalone month of March. If I were to look at 2-year CAGR, again for quarter four, that was about 22%. So again, absolutely in line with our expectations. What does that translate to a full year? Individual AP without adjustment was 1%. And if you dial back, that's exactly what I had said, to say that we will be flat on an unadjusted basis. And if I back out the 1,000 crores that was incremental revenue, we will have double-digit growth. So we ended at 11% for the full year on a retail AP and 2-year CAGR of 14%. So all of that is absolutely in line in terms of growth. In standalone quarter four, NOPs on an unadjusted basis grew by 14%, and on a full year basis, number of policies grew by 11%, as against being flat for the previous 3 years. So we've had very good traction in tier 2 and 3. To give you some numbers, on an unadjusted basis, we grew by 1%, like I said. Against that, the tier 2 and 3 grew by 13%. So again, very meaningful inroads that we have managed to do, being fairly margin agnostic between tier 2 and 3 and tier 1. So there too, we did well. So to summarize, growth is very much in line with our expectations. If we back out the additional 1,000 crores of inflow that we got in the last 15 days of March, we managed to make significant inroads as we had desired in tier 2 and 3. We also managed to grow the number of customers by double digits.
As far as AP itself is concerned, FY24 for the full year, if I look at the number, you had guided for about mid-teens number, 13 to 14% growth is what you had guided for. Now, if I take what happened in last year and what happened this year as is, then the number is absolutely flat. In that context, you sort of missed that guidance. What I want to understand from you is that was that guidance given keeping in mind about carving out this 1,000 crore And in that case, is it as per what you had expected?
Absolutely. And if you look back on any of our previous communications, especially on analyst call, it was always double-digit growth backing out the 1,000 crores of additional inflow that came in the last 15 days. So the double-digit growth was after carving out, and we have ended at 11%. Now, it could be instead of 13%, we have ended at 11%, possibly. But we believe that 11% that is rich in terms of protection. So protection, for example, has grown by 27%. So the quality of that growth also is fairly good, and we are reasonably satisfied with having reached the 11% growth.
Okay. Another thing that I want to understand from you, and of course for the full year FY23 and FY24, the impact of taxation of course came on large ticket savings policies which were more than 5 lakh rupees of premium annually. Just to look at the numbers in terms of how things have changed for an insurer like you, out of your total book, what was the percentage or the share of these large ticket savings policies in FY23, and now as we end FY24, where does that share stand in terms of the percentage number?
Yeah, because of the skewed nature of growth. And before I come to the percentages, let me clarify. Policies in financial year 24 that were below 5 lakhs have grown by an extremely satisfactory clip of about 19%. We ourselves, frankly, did not expect, but our inroads into tier 2 and 3, our granular approach, our selling to more customers, like I mentioned, 14% growth that we saw in number of policies meant that our below 5 lakh ticket size grew by 19%. In fact, that growth, like I said, has also been a rich growth because of continued growth in protection. Now, in terms of percentage, there's been degrowth in above 5 lakhs. So mathematically, we had said earlier that 10 to 12% was about the impact of above 5 lakhs. So that's come down to low single digits now.
So the industry, in FY24 grew at about 13-15%. 15% is the number that, in that case, if that growth continues in FY25 as well, 15% APE growth on retail and total APE is what we could see HDFC Life as well.
Yes.
Okay. Now let me come to the value of new business. Here also the guidance which we had was about mid-teens growth for FY24. FY24 we see a cut with whatever impact that we have of about 5%. For FY25, since VNB and the constitutes of it would be in your hand, what kind of growth do you expect in FY25 on the VNB side?
I just want to clarify in terms of our new business margin for between FY24 to FY23. FY24, we ended at 26.3% margins. The previous year, we had 27.6% margin. So there is a delta of 130 basis points. Of the 130 basis points, 70 basis points is just, again, the 1,000 crores. You had a 1,000 crore uptick, and the incremental margin that we got is the 70 basis points. 40 basis points is because of euphoric markets that we have seen in towards the end of quarter 3 and quarter 4. And so our unit-linked proportion did go up in quarter 4 from 19% to about 35%, and thereby the dilution in margin. A large part of that dilution was made up by higher protection, but nevertheless, net dilution was about 40 basis points. So 70 basis points because of the 1,000 crores and 40 basis points because of the unit-linked proportion. And you would be able to triangulate this as well, because if you remember, just in standalone quarter 4 of last year, our value of new business grew by a whopping 69%. That itself showed that the 1,000 crore impact had come into that. And so I'm just backing that out to say that we are fairly range bound in terms of where we would have ended had the 1,000 crores not come in. Now, moving on to your forward-looking question in terms of where we should be, we discussed just now that we will be on the upper end of growth, the sectoral growth. Similarly, our VNB should be in tandem with that level of APE growth.
A little bit on the distribution side as well. As far as your total APE is concerned, in FY24, what was the share of HDFC Bank which came to that in current financial year? How do you see that share moving by the end of FY25? And what growth do you expect in terms of sales that come from HDFC Bank in FY25?
So HDFC Bank was about 48% of our retail APE. And what we don't target or pin to is what should HDFC Bank be as a percentage. I want all of my distribution channels to grow. And so I don't want to, again, pin something. And each one could grow at a different pace. And what percentage is a particular channel is an outcome, mathematical outcome of that. However, what I do want is that my counter share at HDFC Bank to continue to go up. It has gone up fairly handsomely to touch 63%. This is on the entire basis. And if you remember, really discussion started happening after the merger. So this is about 8 months of this business has given us a full year target of a full year counter share of 63%. So hopefully, with coming closer and working very closely with the bank, we continue to inch up. However, it is very possible that my agency channel grows faster than HDFC Bank channel.
You know, it's a very nice bounce which has come through. That's HDFC, of course, HDFC Life in focus. Stocks also recovered, by the way, from the day's low. But so is the market. It's a 100-point recovery from the day's low on the Nifty. The low was 21,777, and we are at 21,890. So almost a full 100-point recovery. Strong green candle is what you have going at this point in time. So, that's it's the first hour, right? Not even the first full hour, which is passed. Market breadth is still negative, 4:1 in favor of declines. Mitesh is back with us. Mitesh, just your thoughts on the price action. You were saying earlier that you'd wait to trade the bounces in any significant way. You'd give it time. So just your observations now.
Prashant, I think, I was taking the closing chart as a pivot level. And 21,800 has come into some kind of, support. And therefore, we are seeing that the market has managed to do a bounce back. But then I think, I would still believe that the overall structure is negative and therefore not be too, aggressive in taking long positions right now. My belief is that I think, with this bounce back, 21,950 is the to about 22,000 is the first support, first supply pivot area. I think if that gets taken out, then I think, we are looking at possibly this end of this correction. But for the timing, the belief is that from those levels, we will see supply again. So not trading the indices, but closer to about 21,950 is a range where I would want to figure out and see if there's some shorting possible. Having said that, the stock calls which I have, a buy on IDFC Limited, that's the stock to trade on the long side. Buy here with the stop below today's low of 119 for targets of 130. And interesting bank is on the negative side, so I have a sell call over there. Sell here with the stop just around levels of 1470 for targets of 1420.
Thank you, Mitesh, for joining in. By the way, even the cuts on Dow Futures have eased a bit. In the morning at 8 o'clock, the Dow Futures was down 370 points. Now it's down about 270 points. So in the red, but just by a lesser magnitude. We'll slip into a break on that note. On the other side, Manisha will put the spotlight on the commodity market. Stay tuned. Welcome back. 21,900 on the Nifty. The top Nifty loser is BPCL as crude prices are still at $89 per barrel. Axis Bank, Bajaj Auto, Tata Motors, Infosys, HDFC Life. These constitute amongst the big Nifty losers, large cap losers this morning. But now let's turn our attention to the commodity markets and get the latest there. Manisha.
Well, thank you for that. It's been some morning as we continue to deal with various kind of reports from various areas as well. But what we have seen is very volatile morning for many of these tangible commodities. Crude oil price is clearly in focus because day before yesterday, we saw a 3% decline and prices go down to a 3-week lows. But overnight and today morning, we're trading almost 2.5% on the higher side. We did see prices go up by 4% as well at one point in time to almost 90.5. There are concerns on oil supply disruption in West Asia and Middle East with the kind of reports that are coming in. So a lot of trade clearly is sentiment driven. Having said that, the US has imposed sanctions on Iran and Venezuela, and that also seems to be working its way into prices. Iran, remember, the oil exports from Iran in the last year have been the highest in 6 years. Of course, the sanctions do not or exclude oil companies in Iran, but the markets do believe with what's happening in the Middle East and West Asia, you could be looking at this sentiment continuing or premium continuing on the higher side for the crude oil prices there. The gold prices also have surged up. We are looking at near record highs onto that one as well. After that news that came in the morning, we saw the prices go all the way to $2,412 an ounce. But from those kind of levels, there is some cooling off as newer reports start coming in and the markets are reacting to this as well. But the major gains continue in case of the base metal as a sector. I mean, April is going to be a second very strong month here. We have seen supply disruptions, improvement in demand. The defense demand is coming in. Infrastructure numbers have been on the positive side. The US dollar index slightly softer from its 6-month highs also seems to be supporting many of these metal prices here. So I'll start with nickel, where we have seen prices trade at a 29-week highs right now. And we have seen 9.5% of a jump up in last 1 month. Not just nickel, tin is trading at a 2-year highs as well. Here as well, it is about mining disruptions in Myanmar, which are keeping the prices higher. Tin also is used in battery and soldering, and that is where the demand seems to be coming in stronger. And tin also has seen multi-year highs continuing for the last couple of months now. The other one is copper, and 2-year highs onto this one. $9,730 an ounce is a ton is where we are trading onto this one, up 8% in last 1 month, and the copper prices have been the best performer really in the last 10-15 days. Aluminum is trading at a 14-month highs, 15% of a jump up in last 1 month. You also have iron ore prices now trading at around 5-week highs, and coal is trading at a 15-week highs. Everything that you see in sense of tangible commodities continues to be bought into.
Okay, all right. Manisha, thanks very much for that. So that is, of course, top of mind as far as commodities are concerned. The other big news story is, of course, the elections which kick off starting today. We get you a discussion on that when we return. We have senior journalist and political analyst Ninad Seth. We'll also have with us senior journalist Sanjeev Srivastava joining in to talk about this. Stay tuned.
Well, as the first phase of the 2024 elections begins today, our team of reporters are on ground to bring you an extensive coverage on how the voter turnout is as of now and how the mood is on ground as well. First up, Jude is joining us from Chennai. Morning, Jude. Tell us, how's the turnout and what's the mood?
Well, the long and short of it is that the turnout, at least this time around, is a lot more than usual. We are seeing some ambling of voters as they make their way, coming to line up at their nearest poll booth and cast their vote, really. Remember, the voter turnout is traditionally less than expected as far as Tamil Nadu is concerned. You normally see middling 60s to early 70s in terms of percentages of voters turning out. But what we have been seeing is a number of voters who have been turning out as far as this state and the city of Chennai is concerned, at least in early parts of the morning itself. However, the fact is that a large number of these queues are largely because we have been seeing some malfunctioning of EVMs in multiple booths across the state from the early parts of the morning, which have led to longer queues and longer times taken to vote, really. So that's the ground situation as far as Chennai is concerned. But the fact is that it is indeed a crucial vote for Chennai. Remember, it's a three-cornered contest between the BJP, the DMK and the AIADMK insofar as Tamil Nadu is concerned. And that's pretty much brought these long lines of voters to the poll booths, really, to cast their franchise. Remember, 39 out of 39 seats from the state go to the polls today. There's the extra seat for Puducherry as well in the region. So that's part of the list of constituencies that will poll today. Remember, key candidates as well. The DMK fielding all its incumbent candidates from crucial constituencies like North, South and Central Chennai, including constituencies like Sri Perumbudur, Nilgiris and a constituency like Thoothukudi that are seeing names like T.R. Balu, A. Raja and Kanimuri all recontest existing incumbent seats. This even as the BJP is playing challenger by fielding its state president in K. Annamalai from its recent stronghold in Coimbatore, even as bigger names like Pon Radhakrishnan and Central Minister of State L. Murugan are being fielded from constituencies like Kanyakumari and the Nilgiris. The AIADMK, remember, cannot be counted out simply because the party has a strong position insofar as the constituency, the Kongu region is concerned, which includes constituencies like Dharmapuri, Coimbatore, Erode and Salem. So a three-cornered contest, well and truly, issues like fiscal consolidation, fiscal allotment, flood relief, the Kachativi Island, a number of issues really at stake as far as Tamil Nadu's voter is concerned. But which way will they go in a three-cornered contest? We don't quite know that just as yet. But I guess the next few weeks will tell us. Back to you.
Jude, thanks very much. There's a pretty comprehensive sort of snapshot of what's happening in Tamil Nadu over there. Sandhya is now joining in with updates from the first phase of polling in Maharashtra. Sandhya, take it away.
So Prashant, I think Maharashtra is the most interesting state when it comes to Lok Sabha elections because of what has happened in the last 5 years. All the alliances, which the new ones were made, the olden ones were broken. So this time, for the first phase, 5 seats of Maharashtra are going to polls. And the key seat here is Nagpur. So other than Nagpur, it's Ramtek, Bhandara Gondia, Gadchiroli, Chimur and Chandrapur. Now, obviously, all eyes are on Nagpur because of Mr. Nitin Gadkari. But I think if one seat BJP is the most confident of is Nagpur because Mr. Gadkari won the seat in 2014 also and 2019 also with a huge margin. So reluctantly this time, Congress has fielded its sitting MLA Vilas Thakre from this seat. But the seats which I think are more important in terms of, interesting actually in terms of a cutthroat battle, that is Chandrapur. Now Chandrapur was the only seat which Congress won in 2019. Suresh Dhanorkar was the only Congress MP from Maharashtra. Unfortunately, he died last year, so Congress has fielded his wife Pratibha Dhanorkar from the seat. And now BJP has fielded Sudhir Mungantiwar from that seat, and Sudhir Mungantiwar is the former finance minister of Maharashtra. Now this seat is interesting, as I said, because that was the only seat which Congress won in 2019. But apart from that, this is that one place where BJP is not as strong as compared to the rest of the seats. See, the 5 seats which are going to polls today in Maharashtra are the Vidarbha region seats. These are the easternmost parts of the state and the central part of the country. Now, other than this, another interesting seat is Ramtek. now, because Ramtek was Congress's strong bastion, before the BJP took over, swept the whole country, Ramtek is another important seat for Congress and BJP.
Okay, Santya, thank you very much. Absolutely, this is going to be a fascinating contest here in Maharashtra with the backdrop that you've sort of given to our viewers. Abhimanyu is now joining in from Uttar Pradesh, which of course is, perhaps the single most important state electorally speaking. Abhimanyu, what's the lay of the land there?
Well, in the first phase, there are 8 seats in the state of Uttar Pradesh which are going to polls. We are currently in Pilibhit, which is located on the Uttar Pradesh-Uttarakhand border. It's an interesting seat by means of the fact that both the BJP as well as the India Alliance candidates who are contesting from this seat are not domiciled here. And also, there have been instances in the past when the candidates who have contested or have won from this seat have not been domiciles of this particular seat. Now, that's, of course, which is a prevailing sentiment when we spoke to people. There was a certain degree of questioning from their end that we often get candidates who are not domiciled here. Nevertheless, till now, around 12.25% voting had taken place till the reports which had come in till 9 a.m. The turnout is expected to increase despite an increase in temperature in the recent few days. And of course, this is possibly going to deter voters from coming out during the day. However, as we have seen in previous Lok Sabha elections too, the voting picks up in the evening after 4 p.m., after 5 p.m. So clearly it would be a wait and watch situation how the polling is going to turn out. As far as the candidates in this seat are concerned, the BJP has fielded Jitin Prasada, who is of course a politically experienced candidate, and it's the similar case with the Samajwadi Party, Congress, the India Alliance candidate, who is also a former MLA and a former minister in the UP government. The same goes for the BSP candidate. So, of course, they are expecting anti-incumbency to help their way. However, the BJP remains confident of retaining this seat. When we spoke to Jitin Prasada some time back, he was confident of achieving a victory on this seat. He has replaced the sitting MP on this seat, who is Varun Gandhi. And after 28 years, there is a situation when there is no one from the Gandhi family who is in the fray, because since 1996 it was either Menaka Gandhi or Varun Gandhi who had contested from this seat. So it remains to be seen how interesting this contest is going to turn out to be.
Okay, all right. Thanks a lot for joining in and giving us that quick ground check on how the mood is. We'll keep touching base with you all through the day. Well, let's get in Mr. Sanjeev Srivastava, senior journalist who joins us now. Good morning, Mr. Srivastava, and thanks a lot for joining in. Well, I wanted to talk about, Chennai. I've been there. I was there for a couple of days, and the feedback that I was getting was very, very mixed. Now, if you're going to see this tally of 400, 350, 400 that's being widely touted, they'll have to make inroads out there. Realistically, how do you see their chances out there?
So, what did you think of Chennai and your interactions with people there? Do you think they're winning a...
No, it was, I mean, the feedback that I got was very, very wide, and I wouldn't want to put a number to it. But the sense that you got is they're going to make inroads out there. And in terms of percentage, it's going to be in mid-teens approximately as a vote share. In terms of how much of that translates into votes is going to be very interesting, because out of 39, the range could be anything. So what about you?
Yeah. So what we are hearing about Tamil Nadu is that, like you said, that the BJP is likely to improve its vote share quite dramatically, maybe. Like you said, mid-teens. But will it translate into any number of seats? It's very difficult to say. I don't think they'll get many seats, if at all, in Tamil Nadu. Even see from where Annamalai is contesting, the voting percentage till about 15-20 minutes back was about 4.5%. So that's not a very enthusiastic vote percentage for somebody. If he's projecting himself and the BJP wants to project itself as a change agent, then there should be a higher vote percentage. So I think their vote percentage will go up in Tamil Nadu. Unlikely to translate into many seats. That's my perception of Tamil Nadu. And overall, I think this 350, 370 looks way off what is reality on the ground. I've traveled a couple of states, a few seats only. But I think we definitely are having an election on. It's a game on. It's not like completely one-sided because very interestingly, it is people still want Narendra Modi as their prime minister, but people are dissatisfied with their MP and they want to change the MP. And if many constituencies do that, then Narendra Modi may still become the prime minister, but not with the kind of margin BJP is talking about.
All right, Mr. Srivastava, since you mentioned Mr. Annamalai, how do you see that? That's going to be the big focal point in Tamil Nadu. If he can win and if he can win by a decent margin, that stamps his presence as, the state head. So what are his chances? How do you expect him to fare?
See, the only thing I'll say is Coimbatore is the only seat which the BJP has won in the past in Tamil Nadu. And Annamalai is being talked about as this great new hope, a young educated person, IIT, IPS officer background, coming in with new brand of politics, taking on the established order in Tamil Nadu, which was a two-party system, AIDMK and DMK. Breath of fresh air, as not a family background person, unlike a Stalin or earlier leaders. But will that translate into a win or a near win or a good fight is something I would really be not able to say because it's very tough. So the BJP is very good at creating a perception and talking about it. But on ground, and Tamil Nadu being a new ground, a new area for them, to get a higher percentage of votes is one thing. To win seats would be very different from that. So I would wait till June 4th on that.
Sanjeev, hi, good morning.
Hi,
so, what about Maharashtra? As Sante was telling us, I mean, this is a complex and an interesting one. What are you picking up?
So, Maharashtra, from most people I am speaking to, is again a very tough state. So the BJP has got both the NCP and Sena with it. But the question is, are the voters seeing the BJP with the real Sena or real NCP? Or are they seeing it, the BJP with that kind of a lens that, you broke Sena and you broke NCP? So, and there's a lot of talk, which one hears about sympathy for Uddhav and Sharad Pawar. Now, again, whether sympathy turns into votes, whether they still have the organizational muscle to get their supporters, sympathizer to an polling booth, whether Ajit Pawar's well-known muscle and might as an organizational person translate into votes for his party. These things are all very difficult to guess, but clearly it's not an easy thing for BJP and its allies. It's not an easy state. It will be a tough contest. What I am making out of this election, Prashant, is that this is a real election. A street-by-street battle is on in many places. BJP still has an edge. People still want Prime Minister Modi as their Prime Minister for the third term. But are they voting on the ground for their MPs? Are local issues dominating on the national issue of seeing Modi as the Prime Minister again for the third time? So like in Rajasthan, I see a lot of people wanting Mr. Modi, but very dissatisfied with their MPs. And Mr. Modi is having to contest local issues, local candidates, local perceptions, local mood swings. So that's the real contest. That's where somewhere it is helpful for the opposition that they don't have a face being projected. So if it was a Rahul Gandhi or anyone else against Mr. Modi, it would have been so much easier for the BJP and Mr. Modi. Now with a lack of clarity on who is the Vikalp or the alternative, it has become somewhat more muddled and easier for the opposition on the ground, if you can understand what I'm trying to say.
No, I get it. We have Ninad Seth also with us. Ninad, we were hoping to sort of get you on a little earlier. But tell us, I mean, we talked about Tamil Nadu, we talked about Maharashtra, and a little bit about other states. You might have sort of heard what Sanjeev was telling us. But talk about all India. What is the picture looking like? I mean, it's a long election, right? all the way from now to the 1st of June. BJP, of course, has been strong, dominant in its sort of core North Hindi heartland belt, trying to make inroads into the South, Tamil Nadu, etc. specifically. What is your number, if I can sort of boil it down to that, Ninad?
The number for the whole election?
Yes, for the whole election.
Well, I don't know. I mean, I'm not the soothsayer, but I would still say that, the fact of the matter is that it's a little bit of history repeating. I think there are three issues here. One is the direct connection of Narendra Modi with the voter, which in the general election, the Indian elite has generally, understood. This first time since Nehru, I would say that there is a prime minister who has a direct connection with the voter. The second, I would say, it's very important to realize that in the global slowdown, the Indian economy is doing relatively well. Direct transfers, agricultural relief and all other measures, we will now be seeing how they add up. Because, bear in mind, it is not easy in a fractured country like India with so many different, mini polities to go in for a third single party majority. That I think is quite unprecedented. It's simply unimaginable. So as for this particular phase of the elections, I think it's very interesting that in the Northeast, BJP is the dominant party. It wasn't so even in the last election. I think in Tamil Nadu, BJP has only 3.7% vote share. I am not really sure whether it will score even a single MP there. But the point is not that. The point is that if it dramatically increases its vote share, then the southern, comfort starts settling in. Finally, one more thing I would like to say that the impact of a lot of people are saying that the impact of the Ram Mandir has sort of faded away. I do not agree with you. As countries become richer, for example, and this is not new for India. If you look at Germany when it became a $3 trillion economy, ever since then, it is ruled by a party called the Christian Democrats. It is not a secular party. The party's name is Christian Democrats. In American elections, the South, the Christian South has a huge sway. So, as people, and in India also, we are getting more comfortable in our own skin. So I think the Ram Mandir is a very important issue in this election.
No, Ninad, so let's just invert that question, right? BJP, of course, is extremely strong. Has been very strong in the north, right? Actually, it's been strong throughout, but north, of course, is the core voter base. So the point is, can they become stronger, or should we look at? I mean, it's the incremental vote which matters, right? So is that are they going to do better? Will they? What's your sense in that sense? And that's why I started. Yeah, go on.
Yeah. In Tamil Nadu, I do not see them making too much of a radical change. In Karnataka, they are going to surprise everybody, in my opinion, and do very, very well. Karnataka is the real key point. It's the entry to the Deccan for BJP, and it will be very interesting to see, in my opinion, how the Karnataka effect then translates going to Andhra Pradesh, going to Telangana. They are doing three things there. They are having a local leadership to rise. They are doing alliances, for example, with TDP. It's a work in progress. In my opinion, in this election, from the last time, their tally, I think, was 24 odd seats in the south. I think it will definitely improve.
But you're not putting a number to it.
I'm not a soothsayer, but I would say that it will probably cross 32 perhaps.
Okay. Sanjeev, you want to put a number to it?